Officially, good morning. Happy Sunday. Welcome out to the Sunday Market Insights. My name is Scott. I'll be your host. Great group. I knew I had to just give it a few minutes for everybody to get popped in. It's good to see you all. You should hear me. You should see my screen. You should be able to speak to each other and me through chat. Good morning, Ray. Good to see you. All right. As always, let me remind you, this service is for education and illustrative purposes only. Nothing we say or do is intended to be a recommendation to buy or sell any security or financial product. We're not brokers. We're not advisors, yada, yada, yada. What are we going to do? Let's posture. Oh, I really feel sometimes, there are certainly times. I'm gonna say this. There are times where I feel like oh man, I want to be so bullish, and my posture like slows me down. And then it's so bullish, and I'm like, oh, I felt that I wanted to be bullish, and I just remind myself, like, yes, there are those times when that happens, when you're like, you swear you have a feeling, and there's something, right, that something's gonna happen, and then anyway, I learned a while back to just really trust the system, trust the orientation, trust the process. If it needs to be adjusted, adjust the process and then continue that way, right? Like, so for example, when we don't adjust our short-term posture score as aggressively to the downside as we do to the upside, because we have a recognition of market's tendency to overreact. That comes because I didn't score it that way before, because I did change it and then I was oriented the wrong way, and I'm like, wait, that's not helpful. So I do want you to know that there is some trial and error in this, with lots of real-time execution that led me to say, hey, I shouldn't go from a quick 1 to -1 on the short term, because that's going to be hard to get bullish again, and it's going to have me thinking, right? So as I explain those things, if you ever want more detail, where you're like, hey, what do you mean by that? Like, where does that come from? Is that something you did or something you worked? Like, I'm willing to share that, because I know you're kind of just like trusting me. But anyways, right now I feel like trusting the process has been super helpful in this market, where I'm like, relax. No, stick with what you're doing. It's all fine. Thank you, Steven. Steven loves the process. Very few stocks. All right, so we're going to posture. We're going to look at the economic calendar, identify the sectors that we maybe need to look at. As the dust settles from this, yeah, we should get ready to do kind of a lot of maintenance on Tuesdays and Thursdays over the next few weeks. We probably won't do much maintenance tonight, but what we'll do is we'll discuss our strategy for maintenance as we move into Tuesday and Thursday classes. Early week opportunity list. I'm expecting it to not be very big. I'm expecting it to still have a few bearish candidates, but not very many. Hence why the bearish trade that we put on was an SPY trade last week. It was already feeling that way. Did you guys notice that? I'd like to hear from the group, because over the last couple of weeks, as I've checked in with the group, there's been more, hey, I wouldn't mind trading bearishly. I've been trading bearishly. So now, as we kind of are like, ooh, let's see what happens, because there was some things that went on, and then all of a sudden it sold off again, and we're like, okay, I'm not sure. I'm open to it. I'm going to have both a bullish list and a bearish list, but I wouldn't be surprised if there's fewer on the bear list, but I'm always willing to trade into the SPY. Okay, let's do it. Trump's Liberation Day. I'm not sure who's liberating who from what. I like to call it the Tariff Reveal Party Day. Tariff Reveal Party, TERP, TRP? TRP Day? I don't know. We'll see. Um, Trump couldn't care less if car makers hike prices due to tariffs. I don't know. Yeah, I feel like that as we get closer to the head of this thing, it's not going to generate enough ratings. Is that the right word politically these days? I'm concerned that it maybe isn't going to generate enough ratings and that something more volatile could come right after it too. Anyone have that concern where there's like maybe a delayed secondary aftershock? Would we call it an aftershock? I don't know. We're in somewhat, and this is what I said the other day. I said, there's a lot of firsts. I'm learning just like you. I never traded in a pandemic before. 2020, never. That was new. I've never traded in a post-pandemic recovery. I've never traded in a weird supply chain disruption. There's a lot of new things I'm seeing. I've never traded in this kind of a aggressive and adversarial political environment with tariffs and things. I'm concerned. Anybody else weigh in? I'd like to hear. Miguel brings up a great point. All while these shifts in prices turning back up that the Fed's noticed, has the Fed now saying the potential for a recession is significantly increasing, and I'm not sure we have what we need in place to manage this if it starts to really turn south. Oh, Sandy maybe just pulled out the most amazing ever. The tariff reveal ultimate mess party. I feel like I might not even be able to finish today's session as good as that was. Like, do we just end and call it a day? Because that was awesome and hilarious. Fantastic. Thank you. I'm going to take that with me all week, everywhere I go. That's amazing. Okay. Oh, the rain. It's raining in Georgia. It's raining in Southern California. I've got some sun here in Utah, though. All right, you guys. Let's get to it. Here we have, let's just kind of orient around the news. This is new, I think. Did I refresh this? Let's just see what refreshed looks like. Okay. Mortgage rates, no, not currently priced in. That's concerning. These are all just opinion pieces. I'm just scanning headlines to just kind of see what is the... as far as news sources go, I would say this. I don't care once we dive in, but Yahoo does a great job. You can see we have Reuters in here, Yahoo Finance, Bloomberg. So they're going to Associated Press. So they're going to bring in a compilation of, what's going on. What are traders looking at? They definitely have people that talk to traders and put the right stuff on. So you can see here, U.S. employers tap brakes as tariff policy dims outlook. So hiring. We've got some concern there. Let's look at the economic calendar. Last week, still treading okay, right? We're still treading okay, but we're coming into the first week of the year or of the month, which means what? It's an employment. So this news article here about employers tapping the brakes, I don't know. What's that based on, Bloomberg? I might tap that one just to kind of be like, are they orienting that around some data that I haven't looked at? But it's employment data this week, so this is good. We wanted to talk about the economic calendar anyways. Job openings are supposed to stay flat, so that indicates there's as many jobs posted now as there was a month ago. ADP, if you remember last month, had a surprise like, it was less, but they're expecting that to tick back up to 120. Is 120 good? That's adding jobs. Is that good? We'd like to see 150 is kind of the like maintenance number, though I put much less credence into the ADP number. When we look at jobless claims, or the expectations, still 220s, which is fine. We're okay with that. Maintenance levels. As of now, that doesn't actually have us thinking the data supports employers. That's a bit of a hysteria to me. Like certainly I think that the tariffs are concerning. But I don't think that there's any indication that employers have done anything different in the last month, specifically as a result. I think everything we're seeing is still the same. I don't know. Maybe I'm wrong. Maybe I should be more concerned. But actually, right now, the employment for this one, press 250. If I have 3 weeks in a row above 250, yep, because we've seen it pop to 260, and everywhere else. Everywhere else is like, oh, that's the worst we've seen in 9 months or like 6 months, and we're just like, okay, let's see. And then the next week it pops back down. You're like, oh, it's nothing. That's the point of looking for multiple. Lost government jobs will hopefully boost the private sector. Well, I mean, they can only fill jobs that are available, right? Which means it's filling these jobs. So if they're filling these jobs, then these openings would drop and we would actually see a spike in ADP numbers. And also, right, this isn't just government jobs. This is the government report about non-farm payrolls. So this is strictly private. So there you go. This is Department of Labor data. Unemployment rate is expected to stay the same. We're expected to meet, you can see we are at 150 last time, we're at 140 this time. Now, what if? Then there's the what if. If these are the expectations, what would we expect to see? Well, we'd expect 140 to drop down to 70. If we saw that, we'd be like, oh, now that's data that supports that thought process of the employers are very specifically making different decisions about how they're going to hire going forward. If we see the data show that, then we're also going to be a little bit more concerned about that. So, yeah. And we've got some Fed speak Friday. Jer Bear himself will be talking. But I do not see my man Goolsby anywhere on the docket. GoolsbyForFed.com. I should go actually just buy that domain. It would be funny. All right. Let's look at our Fed watch. I've maintained July as my date, and I'm actually thinking of pushing out to September. They still came out and said we can, like they were like, we can still do 2. Not like, yeah, we're still looking to do 2. They were like, well, it could still be 2. Where you at, everybody? Tell me your date. I'd like to have a Fed check-in. What do you think? Not what do you hope. What do you think will be the next date the Fed cuts? So June press says, if data supports it. Problem was, and let's go back to that calendar one more time. Let's go back to last week's. What do we need to talk about? We need to talk about income was good. Came back better than expected, 0.8. Spending was higher than prior, not as high as expected, but that's okay. And then we had PCE, flat, uptick. So was it a huge uptick? No, a minor uptick. But it was an uptick. And so that's tough because it would have to really, like, it's showing some stubbornness. Miguel says, I want it to be further away. That way there's no influence to the current volatility. I mean, I kind of feel like it has to be. I feel like the Fed is like, we can't do anything until we see what your policies are and what the results are. So him coming out like, I think it's time for the Fed to lower rates, you're like, you just don't understand the assignment then, because they're not going to. They're absolutely not going to. The same reason they stopped earlier is why we're here. Now we had an uptick. They've got to see it start moving again. So I agree with Press. Data's got to support it, and it's got to come down a couple months in a row, in my opinion. So we need to see April come down, and then May come down. That's the only case I believe that supports June. So that doesn't give you much time, because April numbers are coming in, or March numbers are going to start to roll in. I don't know. I guess we'll see. Beyond June. So let's go look. May, which is 38 days. It's 5 weeks from now. It's better than 4-1 against. We go to June. This is me. We've seen this before too. Like, I don't think we look at this and think this is what we should expect the probability of it happening is. This is what the market's priced in to some extent as a probability. And we have to be careful about that, because if we're like, I don't know. If they've priced it in, what would they have to do if it doesn't happen? Well, then it has to get priced back out. So for me, I'm looking at this as there's some kinetic bearish energy here developing for Fed disappointment, right? Where I'm like, really? 65% of you think it's going to get cut in June based on what we see right now? That's hopeful. That's my thought. That's why I come look at this, is I want to have a sense, how much does this have loaded in our market? And when I see this, that, like Press said, that could happen with the data supporting it, but we just saw data the other way. So that's my thought. All right, let's go hit it. Oh no, did I just lose? Hold on. Damn Sundays. Nope, I think I'm still connected. Let's go see. Actually, let's just go real fast since we're already there. There's me in July. July, some people are now thinking there's going to be 2. Right? They think there's going to be 2 by July. There's only going to be 2 all year at best. And now you have people thinking there's going to be 3 in September. This is just like the lollipop and gumdrop forest, and people are riding their unicorns around in here. This is just lunacy. You got some people thinking they're going to cut it an entire % by October. Anyways, all right. They literally have said too, like that's pretty much like, don't look for more than that, and that's assuming everything else goes right. Bob Rowland is right. It'll happen when it happens. What's the good news about this big chunky sell-off right here without anything else going on? I don't know if we got. Yeah, we did not. Average volume is 70. We got 71. You needed to get, and it's not huge, but you only needed 73.5, 5%. 5% of 70, 3.5 million. 73,500,000 is what you needed, and we got 71.6. No above average volume last week. We still recognize that relative to the adapted volume, this was definitely a spike. But we're not going to make a case for that type of outlier exception to change our score. Part of the reason why this had a hard time was because the volume here has been raised so much by all of this volume, right? Like we were 40 million here, we're 70 million here. Well, as much as that makes it hard for the buyers to get up to that watermark, it also means we're not going to count a sell day that barely gets there. That's at volume. So anyway, I know we're not scoring volume yet, but I did want to just reflect that. But I do think that was still an above average volume day relative to the week. However, it's not going to impact. So it is impactful that it's like, yeah, that was a pretty big sell day. Just we're not going to have it scored. That's my point. That's the point I'm making, if that wasn't clear. What are we going to do to score this? As I said, on Monday, Tuesday, and Wednesday, I said to myself and to us as a group, well, this looks pretty good. And I am going to give it a plus 0.25 because it broke out of that old high. Bing! And then the problem is it came back down. And not only did it come back down, but it like broke this low. So it's like, I'm going to take this minus away. Am I going to take 2 away? No. Because I didn't really consider that much of a low. This is my last formal low, right? You can kind of see that from here to here. I'm going to say take it back. Net change is right where we were, which supports this. What does that look like? A 0 or close to it. What would my score, or what could or should my score be? Let's go look at my market posture score. Oops, I did short term first. Sorry, guys. I'm like all out of sorts. I'm going to leave mine at 0.25. That 0.25 feels right for the short term. Tell me if you see it differently. We tried to get up out of there, and we then came right back in. Am I thinking there's enough selling pressure that we were just going to head down towards 550 and smash below it? No, but am I holding some puts to see if we're going to get down there to 550 and maybe? Yeah. Yeah, definitely. Add a new column. Oh, you're right. I need to. I'll do that when I go back in. Thanks, Bob Walker. Yeah, I'm having an ADHD day for sure. ADD. I call it ADD. It's an ADD day for me. The H wasn't there when I was diagnosed, so I kind of feel like I should never include it. Yeah, you're right. Although even a little below Press. Let me change my color to reflect Press's comment. If you didn't see it, he said So this is where we ended the last week. We started with a boost, tried to hold on to it, still had hopes by Thursday. Right? Whereas like in fact, if you remember on Thursday, I'm like, hey, on Friday, if we get that bounce, that looks great. But no, we didn't. And now we're here. So that net result for that week was a little bit worse. But yeah, not far off. So yeah, 0.25 makes sense to me. Does Friday being open day impact decision? Open day. Do you mean I'm not sure what you mean when you say open day. Give me clarification. But it's I feel good about the score staying the same. OPEX open day? I'm not sure. Okay, let me go back. I'm going to go. Let's get back on track here. Let me copy and insert. And let's make you 3. Can you believe it's the end of March? Q1 is over. That's crazy. Short-term trend. Okay. Let me see. Short term stays the same. Long term, whoops, I don't want to change my. Let's go do the long term. Gotta get my shit together. Oh, goodness. Well, we tested this, but we didn't break this. But if we get lower than this red line, I am definitely dropping it. This needs to hold for us here. Okay. Now, I'm still gonna keep this because as long as I need to make this a little thicker. Let's make you a 3. Oh, that's better. That's better. Now we see it more clearly. Interestingly, way back at some point, I don't know when, I drew this line in. I don't see what this is connected to, though. Is this like... Anyway. All right. It held. That's the bottom line. 0.75 stays. 0.25 stays. Volume. Okay. You might think that I'm just naturally assuming it stays because we didn't have any new, but that's not the case. I want to look at it every time, so let's drop this down. Don't forget that last week was Market Posture Week. And so hopefully you had a chance to go through the Market Posture videos and feel more comfortable with this process. Options expiration. Friday was option, but only... Nothing big. Remember that the major option date expiration is the third Friday of the month. That's when the standard options. So the only time you're ever going to see, like, it used to be such a huge deal, options expirations. But with the onset of weekly option trading, and like, you know, there's so many more things that have like weeklies, quarterlies, monthlies, and there's just like this. There used to be triple witching because it was such a major thing where the quarterlies, the standards, and the others, like there was like they were all, then the futures were all expiring at the same time, and it like created like this weird trading. You don't hear people talk about that. In fact, some of you might be like, triple witching, what are you talking about? Or quadruple witching. Witching doesn't even really occur anymore, simply because there's so much continuity now with the advent of weekly options that it's not really a thing. I'm actually, when we're done here, I'm going to go ask ChatGPT, like, what happened? Does anyone still actually look at it, or is there any like abnormalities that should still be concerned? I'll let you know. My premium subscription gives me deep research, which I love just to play with it. I'll like be sitting there watching TV and I'll be like, ooh, I'm going to deep research something real quick. It's so amazing. Triple witching was 321. Okay, so it was a triple witching day this last month. Look at that. Miguel had to go find it on bankrate.com. It's like, you know, we have to go find these obscure references to triple witching. It's not even a trading site. Anyways, thank you for posting. Yeah, I'm interested. I'll share my results. Okay, volume. You can see we're now starting to 1, 2, 3, 4, 5. That's going to drop off next week. So we've got still 2 weeks. This is a little stale, so we're going to start to give this a little less credence. So we've got sell. So we've got 3 sells to 2 buys in this pocket. And then over here we have 4 sells, 1 buy, and 1 tie. Overall, 7 3-1, 7 sells, 3 buys, 1 tie. Oh, wait, never mind. Hold on, guys. I forgot about this guy over here. So 7, 3, and 2. Doesn't really matter. It doesn't change anything. This is still a minus 0.5 to me. That's still a minus 0.5. And next week, when this drops off, this is going to be a little bit stale, right? A little bit stale, but it still orients towards the sellers. However, next week I would be willing to cut that off, especially if we have somebody. This could switch pretty quickly now. Now that we've had 2 weeks with like less volume, and you can see what's happened during that 2 weeks. This is where we have some stability showing up. You took your volume to a 0 this week. Woo, okay. I'm leaving mine. I was at a minus 0.5, and I'm actually leaving mine there as of now. So I did get as low as a minus 0.75. Next week, oops, that's not what I wanted. There's just still enough, and the problem for me is this is stronger as a chunk than this, right? This is a 4-to-1 chunk. Now next week, when we get rid of this chunk and this one starts to feel stale, then we can orient, in my opinion, more around what's going on out here, based on and depending on what happens this week. But we already said this does not get above average volume, so I could see my score possibly going to a 0 next week, from a minus 0.5 to a 0 next week. Now, let's do a quick sanity check on our score. I said I'm a minus 0.5. This is where we start. This is where we end. This is what transpired. So, yeah, I still feel like the sellers, if anything, are absolutely more in control of this market. If I don't see all of this, then it starts to get easier to recognize. Right? So there you go. That's my score. Sounds like there's a bit of a dispute or a little disparity in scoring. Steven's trying to predict the future. All right. We got a hell of a sell-off to contend with that we're carrying over from Friday, mind you. Where's my score? Oh, are you kidding? Like, because I legitimately have a Magic 8 Ball on my desk, so I didn't know if you were kidding or not. Like, I ask it questions all the time. No, you don't. I'm going to ask it if you have an 8 Ball. Does Steven have a Magic 8 Ball? It is decidedly so. You have one. It's in your house somewhere. You just don't know where it is. My Magic 8 Ball told me you have one. Should he go find it? Ask again later. Sorry. It's only given one answer at a time. All right, let's keep going. Major market. Major market. And if you're wondering if I've ever used it for a legitimate tiebreaker on a live trade, of course I have. It's a trading tool. What would I do with it if not that? If you don't have one, you should get one. Like $12 on Amazon, delivered to your house. They're just it's very retro decoration too. You know, everyone's like, "Oh, Magic 8 Ball." I'm like, "Yeah." Sits right next to my bronze bull statue. I was walking through Hobby Lobby with my wife, and I saw this amazing bronze bull statue. I'm like, I must have that. It was awesome. It sits on my desk now. What's going on here? Let's talk about it. The Dow's on top on the 200. Stop getting in the way of my chart. The Dow's on top. The NASDAQ and the Russell are both down here. We really don't love the way that looks. Let's keep going to see if it cleans up a little bit. Dow on top. Russell way down at the bottom. That just really looks nasty. Let's go to 66. When I have a 50-50 and it tells me it's my call. Yeah. That does feel like a cop-out. I feel let down as well. I get your frustration. Here's the 66-day. Even here, you can see the bearishness. I'm not going to call it bearishness. I'm going to call it defensiveness. We've postured so that the Dow's on top. The S&P is next. Then here's these other guys down at the bottom. This is really textbook not good. All the times before when we've like, what would it look like when it gets negative? We found it. Here it is. It's the Dow on top, and it's the Russell and the NASDAQ in this sell-off. Right? The Dow in this period of time is down 3. The NASDAQ's down 11. So you can really, see visually that defensiveness. What are we going to do with this score? I mean, honestly, that feels like a minus 0.75 to me. What did everyone get for volume, by the way? Post your volume score if you're willing to. I want to hear from everyone. You're at a -1 on that, Steven said. Yeah, I don't fault you. I'm going to take mine to a minus 0.75. I believe that is I don't know what that means. Minus 0.75. Okay, Press, you're a little better than me, but a little less than Steven. Bob Walker's with me at minus 0.5. Okay. What else is left to get it to that when it's all down? I don't know, maybe a couple of weeks. Did I count last Friday as a sell on the volume? Miguel asked. No. It was only like 2% above average volume. So I said, nope, I'm not counting it. What did you do? I needed it to be 73.5. Oh, you meant yours to be a little worse. You're still a minus 0.75. Okay. Honestly, I can see that one being kind of all over the place right now. That's why it's good to have a group to sort of figure out, is there a consensus? What does that mean? It just means that we're not that confident with the score. What does not being as confident with your score mean? What means you're not going to trade as much? It doesn't. These things just sort of connect to the next thing, and you're like, yeah, okay. If I see a great trade, I'll take it. If I'm not looking for anything huge. Anyways, okay. Oof, I love it. Keep the discussion of scores in here because I like that. That's what I would need to see. Maybe just a little longer. I'm very reluctant, Stephen, to take my score to the because here's the deal. If it gets worse from here, what are you going to do? You're already there. You can't reflect any more worseness. And I still have an ability to give it just one more tick down to be like, oh God. Right? So there you go. I'm not arguing with your score. If you put it there, you put it there. And that just might mean you ride it there for a little while. So I'm just always, we're like, you guys remember how much it took for Sandy to convince me? More worseness. You guys remember how long it took Sandy to convince me to take that sector rotation to a 1? But then once I did, I left it there for so long. That's all it is, Stephen. It's not like there's a specific, scoring attribute other than possibly, like I said, longevity of sequential negative weeks. That's probably what I would say. Okay, let's go to sector rotation. Oof, got the discussion turned super lively, and I love that. If you're new, I hope you loved it too. And if not, I hope that you start to orient yourself around these conversations we want to be thinking about markers too. Like, is there anything that would make us feel like it's better or worse? And right now, I mean, I think we're all just kind of like waiting to see how the market reacts to Trump Day. Should be posted online. That's the someone should TikTok that. The world needs to know about Trump Day. I have no social influence, so anyways. Trade market, Sandy. Facts. He'll go after you but if you never come to America, you'll be fine. There'll be a message waiting for you at the gates if you post that and then come in. All right, major market. No, sector rotation. Yeah, this one's going to be interesting. So we still have financials on top. This is 200 days though, so we know that this comes with a grain of salt. Communication services, a little bit still high. Discretionary. I mean, you can see we still have 3 growth, but then you have this little flip flop here where like utilities turned up while these others are turning down. What else turned up? Staples turned up. Okay, so we have these 2 that we can see, but as far as their orientation, this still looks okay. Why only okay? Because I have 3 growth up here. Financial, communication services, discretionary. What's down here? Technology. Oh, I thought it was technology and, no, it's technology materials. Okay, so technology is really getting bashed. Great. That's the starting point. Let's go to 133. Where's the best place for you have to have been invested since 2009? Technology and communication services, followed by discretionary. Why? Because it was bullish, and those things do the best. You can see it there. There's 133. 133. What do we have? Still comm services, still financials. Then there's energy, and then there's discretionary. Who's down here? Well, you can see that technology is very quickly making its way down there. You can see that Staples is making its way back up. Now we get to our scoring. Oh, I have no idea what to expect here. I'm so curious what everyone's doing with their score here. Who's on top? Energy. Energy. Energy prices, man, they did all of a sudden just rocket, didn't they, the last 2 weeks? Healthcare. Healthcare is sideways, but holding up, I guess. I don't know who's kind of moving it. Utilities is moving up here. Financials is moving down. It's very interesting, right? This is press. It helps us understand the type of market that we're in, I feel like. Staples is here. Comm services and financials were like holding up and for the growth, and they've dropped down here. They went negative. There's the S&P, and then here is technology and discretionary just way, way down. God, that's a mess. I'm at a minus 0.25. I mean, I don't really feel like it's gotten worse. Like, I mean, you know, you can see that these things have started, but not really there yet. I mean, if they were a little higher up, I'd probably go minus 0.5. I'm leaving mine at minus 0.25. What do you guys think? It's a tough one to read right now. Again, we're going to score it, but one of the things I think about is, what's my confidence level? Press is begging for it. Just put it to the 22 days sooner, for the love of God, Scott. Why start talking? I'm sorry, Press. It's not purposeful, my friend. There we go. Who's the surge? Definitely energy, which is really more inflationary, but not necessarily defensive. Yeah? Steven dropped his to a minus 0.5. Okay, I could see why you would. I just don't feel like there was any specific trigger that said, you know what, I'm going to leave mine at minus 0.25. I'm going to leave mine at minus 0.25. Data center demand for energy, yeah, that could be it. We thought that was a thing that helped inflate utilities for a good amount of time. Yeah, this is not as bad. Oh, it can get much worse, right? Yeah, much worser. It can get much worser. Okay, I'm gonna leave mine, and let's go to the VIX. I'll tell you guys what. Okay, hold on. Bob Rowland said, "Make sure you're all the way." Oh, he's right on all of them. Hold on, son of a gun. Let me go back to just to make sure. Now this one still looks fine. Technology down. Healthcare's down here. Materials down here. Let's go to 66. Am I all the way? Yeah, that looks about the same. Thanks for flagging, Bob Rowland. Good eye. Good eye. Yeah, I mean, I'm gonna leave mine the same. These do look nasty down here, but I'm gonna just kind of go one more week and see what Trump Day brings this week. Let's go to the VIX. So on the short term, we gave it. It was very interesting because halfway through this first week, I'm like, "Ooh, our score is looking like we could get raised a point if it stays this way." And that's a big if because Friday's like, "Ooh, that's a big if." Here, I am actually going to. We took out this low. So I did say there was this here, and we went up, and we said this was a low here. And when we got here, we said it hadn't gotten low enough yet, and that it would still be a lower high, but that didn't come. Instead, it went lower still, and we got to this point. We took this out. So because of that, I'm going to give it 0.25. The last high is still back here. So nothing, this is not all that bad. In fact, you'll notice we're still in a zone that if we recover and then turn over, that's a lower high this week. That's a big trigger. That's a mark I'm looking for. If we got this week, if we got a lower high this week, I am absolutely going to look at that to promote some trades. It did rise. You're exactly right, Press. But it for me, is not enough. This wasn't enough to take away. On the short term, we gave it, we took it away. But on the VIX, I'm going to give it, and I'm going to keep it. I feel like this was enough to get it a quarter point, and it hasn't given enough to give it back yet. So I am going to change this to a 0.5. A little bit of life maybe developing here on the VIX. The long term has trying to hold up. We're pretty neutral on the short term. We're pretty negative on volume, major market, and sector rotation. But the fact that there's a little sprig of hope coming from the VIX, that's institutional early mindset. Okay. That's my final. I am a higher VIX is bearish. Well, okay, yes, but it's not. It's higher now than it was, but it's lower significantly than its last high. Now it could keep going higher, and then I would have to, right? But what I'm scoring right now is the fact that we took out this low in this huge drop. That's where I gave it the quarter of a point. But the way back up, we've only gone not even halfway, and the fact that we're here makes me think we could hit and move it around. So, okay, made a little money on a VIX call. There you go, little day trading on that big jump. Love it, John. Thanks for sharing with the group. Love. Yeah, This is always the tough one, because we're like reverse orienting ourselves to some extent, and then we have to like bring it back to a positive score. But yeah, always willing to talk through that one. Oh, we're going late today, you guys. I'm so sorry. All right. So I didn't drop negative, though I'm not really making a huge qualm about the fact that 18 months ago we dipped to a minus 0.25, and this time we're at a zero. The difference between a minus 0.25 and a zero, there is nothing substantial about the fact that it crossed from zero to minus 0.25. Nothing. A zero and a minus 0.25 are the same basic thing to me. So the fact that we're at a zero is, I'm looking at this exactly the same way I looked at it last time. Now, last time, let's go back. This was 18 months back. Sorry, it was a minus 0.5. Minus 0.5. Still. But when we recovered, I want you to notice the 3 weeks coming out of it. We went from a minus 0.5 to a 1.25 to a 2 to a 3.25. Boom, boom, boom. That's not what we're doing. We're not seeing any recovery. That's not what we're doing, you guys, right? So we have to recognize that we're likely to be, yeah, this is not a V bottom. Thank you, Steven. He says we think it's going to be a slower. Yeah. Yes. That's the point we're trying to get to. What are we expecting here? Historic average for March of 2024, 6.5. March of 2025, 0.8. Yeah, well, let's take a quick peek at it. Here's March of 24, right in here. And you can see what we are getting into. It's this beautiful thing here, and we just kept on trading it for little pullback, and bam, we're off and running again. Versus what we have now. Very different times, very different conditions. Hopefully you're, as a trader, getting more comfortable. It's like if you sit down at a poker table, you're not going to play poker the same way, no matter what table you play at. That's madness. You sit down with the guys in the garage across the street. Yeah, I'm a push around all day. I'm okay at poker. So if I play a neighborhood game, I'm going to be pretty good. If I go to the poker room at Wendover, which is a little border town on this Utah, I do okay. When I was playing a lot, I'd win money. Now I'd probably be rusty. If I went to a Vegas poker room, I would be scared as hell. Right? Like these are context matters. What's our context? What are we doing? And then intra-context matters. What position am I in? And what am I, right? We constantly think about the context before we start to think about what am I going to do? Because you're a blade of grass, and the lawnmower is the market. Okay, so let's crack through this watch list so fast. If you have to drop, I get it. I apologize that we're going over, but remember that I will send this synopsis out later this afternoon, or actually within an hour or two. And that will have the final watch list. So if you're pressed for time, I get it. I will see you tomorrow morning. If you're hanging out, let's go through the watch list and see what we have. What are we willing to trade? I'm actually, and you might be shocked by this, but I'm willing to put Apple on my bullish list. You might be thinking, why, Scott? Bullish, what are you talking about? Again, this is done enough right now for me to see the buyers in a different light than I have since this point here. Now, in order for this to be bullish, what has to happen? That's my line. See that big candle right there? If I cut that in half, how it kind of goes across these candles, and it's like that would be an ideal place to then have a higher low that represents breaking this downward consolidation and then buyers holding on. Apple's on my bullish. It may be subtle, but it is what it is. AbbVie still on the bullish list. We had a trade that we tried to put on there that ended up getting beat up on this little consolidation, but now it's trying to move again. We'll see what happens with that. Okay, let me see if I can start to go faster now. AEE. See, none of these are now too sideways. So a lot of this is I'm not going to trade yet. Amazon, we had a lot of this. Guess what? Reset. Some folks might not mind trying to trade that low. I'm not one of them. I only like higher lows. That's not enough for me. I feel like we've given it all back. Like the buyers tried and they just failed, right? So for me, not there yet. Baba, definitely still on my bullish list. If it can stabilize this week and get that higher low, this is definitely one that I'm going to try to capitalize with. Bank of America. So I'm not going to put the financials on the list yet. I was starting to think flag. Is this in a flag? No. Nope. That's not a flag. Nobody draws a flag that looks like this. That's not a flag. A flag is a 2 to 3 day pattern that's looking like this. Flag. This breaks that thought process. So whatever bullishness we were like, hey, this is looking pretty good, Friday shattered that notion. Okay, great. Be water, my friends. This one almost all the way back. Caterpillar sideways. Nothing there for us. All the way back. CLS, almost all the way back. CME, I'm still bullish. That looks like it could be a nice little bouncer for us if we get a bullish trade. Cisco, ooh, that's not a lot. I might put that on my bear list still. And if so, that actually would have been a trigger on Friday. But so we'll see if that turns into it like anything else. But you can see here, that's not a big surge. It was sideways, got a little piece. It's still kind of underneath all of this. Delta, gave it all back. Nothing there. So interesting, this market right now. I got to tell you, I'm even going to say thank you. I brought it up multiple times, but I felt that Miguel's comment was helpful to me this last week when he just was willing to mention, hey, yeah, you know what? I sometimes get this FOMO, and then I go back to posture because look at what happened. Any of that like pull this week. That comment came out earlier in the week, and then Friday happened, right? That was like such a great, like, hey, yeah, what, there's nothing here that should have us like, oh God, I need to hurry and find a trade. And that reminder came swift and fast and fierce on Friday. And so, anyways. Oh, that's very nice. That's very nice of you to say. I think that the service is absolutely made by the community. So, anyways. Okay, let's keep going. So Duke Energy definitely is on the bullish list. And market conditions had us where you're like, I'm thinking about it, and then didn't. Fast, nothing there for me yet. FI, it's not bad. It's not bad, but I'm not putting it on. Flex is all the way back down. Fox. I like Fox, actually. I think Fox is bull flagging. Yeah. Do you see the difference? Hopefully you do. But that's the pull, and this is the flag that it's in. So I'm certainly looking at that as bullish. You can see a lot more bullish than bearish, even though. So we're hoping this thing is just kind of a shakeout this week if we're going to get back into some kind of a bullish mode. GE Vernova, I actually still see that as having a bullish capacity. That's industrials. Gilead, we know healthcare still has some. That's on my list of bulls. Gold is still bullish for sure. Not a lot of bears right now because there was enough bullishness before. Google, I'm putting on my bearish list, although it's already dropped. Goldman, tell you what, it's hard. Hood, I actually see that as bullish. I see maybe one of those trying to make a bull run. Howmet, that looks bullish. So what does that mean? Well, I'm carrying bearishness from last week. Not a lot, because there was enough bullishness going into it that it's like, let's see. This week, if it sells off again, I have a piece. If it recovers, I've got a pretty good list of bulls to pick from to try to catch something, right, on the higher low or on the lower high the VIX may produce. It's an interesting time. I'm not expecting a lot of trading no matter what. IBM, bear. And the trigger would have been Thursday or Friday, but still potentially valid. ICE is still on my bullish list. I feel like if you notice, like we're not finding a lot of bearish trades. Well, our posture stabilized for 3 weeks in a row now as well. A long-term investment alert for IBM. Oh, interesting. I mean, I'd wait for a short-term trade signal to take a long-term investment alert, but I don't. If there's something fundamental about it, that'd be interesting to see. KMB. No. I still like Kroger as my bull from these guys, but I don't feel like you need to have more than one of those. MasterCard is still bullish, or is bullish from this, which means Visa will be as well. Meta does not look great. I'm going to put Meta. Communication services not looking good. I'm going to put Meta over here. Microsoft still down. Netflix looks bullish. Looks like it's trying to see if it can stabilize. There's my nice stock still working. Come on, buddy. Keep on going. NVIDIA, no. PLTR, yes. Oh, I'm looking for a PLTR trade. I want it. The bullish list is actually not terrible. 2 sideways now for me there. No. Roblox. No. Reddit could still be bearish. It's not looking great. Qs are looking nasty, right? Yeah. Rocket Lab, sideways. RTX is going to be a bull. I'm actually quite pleasantly surprised by the bullish list, to be honest. No, not for me on that one. SPY selling. We'll see what the futures do tonight. We'll see what tomorrow brings. Toast, no. TPR. That feels a little bearish, actually, still. Smaller bearish lists. Tesla, I'm not going to put it on my bullish list, but it is more bullish. TSM, bearish. I'm going to put TSM across. If it bear flags, there's something there. Twilio, no. Visa, I'm going to put as the bull. And Walmart, flat. Okay, real quickly, we're already a little late. This week is... where's my... my word is not working. I don't know why I can't. Oh, there it is. There it is. This week we're on trading systems, which means rules. You have one set of rules for a system. So if you're talking about bounce trades versus breakout trades versus continuation trades, whatever, these are different types of systems. So each system has rules that talk about what markets, what's your time frames, how do you do position sizing, what are your entries, your stops, your targets, your trade management, your tactics. So this is it. You're just developing rules for each system. I would say bounce trade's the first place you should always start. It's an easy one to set rules for. There you go. That's our trading plan section this week. I hope you work on it with me. Thanks everybody. Bob Rowland's asking for a couple. I'm going to give it to him. PPL. Ooh, it broke out, but I think we're late. It's a tough one. I'd watch it. I like it. It's got some momentum. CNP. Is that a railroad? What is CNP? Oh, CenterPoint Energy. Yeah, that looks fantastic. That's a great energy stock. Yeah, let's put that on our list. That one I like a lot immediately. And a little overextended now. Well, actually, no. It looks like it's really starting to turn right now, actually. If you traded that on Friday, I'd be like, that's a great signal. SO, also utilities / energy. I don't like that one as much, but I love CenterPoint. That's a great add to the list. Uber, Miguel says. Yeah, I think it broke its consolidation. And it's trying. If it holds here, that could be definitely a nice little pickup. Trying to finish the cup, something along those lines. Anyways, okay. Thanks for the extra 10 minutes, everybody. It's good to see you all. Hope you have a great rest of your Sunday. Hope you're feeling okay about what this market looks like, what you're going to do with it. I think we're setting our expectations the right way, so don't ask for much, and we won't be disappointed. I'll see you tomorrow morning, 9:15 a.m. Eastern. As always, happy trading.
Recording stopped.